Federal Reserve Chair Jerome Powell defended the central bank's response to the COVID-19 pandemic in a Princeton University speech. Powell specifically defended the central bank's decision to cut its key interest rate to nearly zero in response to the pandemic. It also launched an asset purchase program that involved buying trillions of dollars of treasury bonds and mortgage-backed securities intended to keep longer-term interest rates low. He also praised government employees and U.S. universities that have been targeted by the Trump administration. The International Monetary Fund has expected the Gulf countries to post steady economic growth of around 1% annually in both 2025 and 2026. Dr. Jihad Azur, director of the IMF's Middle East and Central Asia Department, presented the fund's outlook for the region during an economic panel in Riyadh. Azur noted that despite persistent uncertainty, general economic recovery is anticipated across most countries in the region in 2025. He stressed that the rebound will be more robust among the oil-exporting economies, particularly within the GCC, where the non-oil sector is growing. Azur further downplayed the impact tariffs introduced, adding that the effect would be limited for most regional countries. The director of the Middle East and Central Asia Department at the International Monetary Fund, Dr. Jihad Azur, has revealed that a mission from the fund is heading to Syria. Azur added that the mission will be briefed on the reality of Syrian institutions to develop a comprehensive cooperation framework to provide technical advice and training of key cadres. Azur further explained that the conflicts in Gaza, the West Bank, Lebanon, and Syria have led to severe economic shocks and negatively affected the GDP of those countries. He considered that the region faces higher risks compared to others, which led to significant volatility in the markets after the announcement of tariffs. The General Authority for Statistics has shown that Saudi Arabia non-oil exports, including re-exports, rose 13.4% in the first quarter of 2025 to 80.73 billion Saudi riyals compared to the first quarter of 2024. Non-oil national exports, excluding re-exports, climbed 9% to 4.12 billion Saudi riyals, while re-exports surged 23.7% to 26.6 billion Saudi riyals. The share of oil in total exports dropped from 75.9% to 71.8%. Imports edged up 0.1% in March and rose 7.3% in the first quarter to 222.74 billion. Imports edged up 0.1% in March and rose 7.3% in the first quarter to 222.74 billion Saudi riyals. As a result, the trade surplus narrowed by 28% in the first quarter to 63.05 billion Saudi riyals. The Bank of Israel has kept its benchmark interest rate unchanged at 4.50% for the 11th consecutive meeting on Monday. The central bank cited high inflation as its chief concern, despite a moderate economic recovery amidst the war on Gaza. Israel's annual inflation rate rose to 3.6% in April, remaining above the government's from 1% to 3% target. The bank highlighted risks like geopolitical developments, supply constraints, and shekel volatility for potential inflation acceleration.